Okay, welcome guys to the live coaching session. Now, the best trade setups for each individual trade tool. This is a little bit of a snapshot of what what you're looking at each day, and then until you get efficient in execution and you understand the trade tools a bit better. Now, this is one of the key aspects why we're sort of moving. Let me just move the hide the video pane. One of the key reasons why that sort of program, the funding program, is going back to MT5. Like myself, just using C Trader, right? And I've been using it a lot for Prime Time Pro, but the other tools do come into play quite a lot, and it is very restrictive if you don't have these tools. It really made me understand how valuable they were, and why a lot of traders have always asked for them or purchased them, right? Because it does make trading a hell of a lot easier. Now, let's just get started because there's one key thing that you just need to remember, right? And let me just get the main page over. So there's five trade execution tools that we have, right? And there's two ways to look at this. And the way I built them, one is for technical trades and one set is for fundamental trades. And over time, just working out where there was a shortfall of, the whole aim of using these trade execution tools was to save you spending endless hours in front of the screens. Because when we know there's a setup, we know what we want to do and where we need to do it. We just don't, we got lifestyles, we got lives, you sleep, you get a whole range of things. So, on a technical perspective, we've got Trendline Trader. Okay, now this is probably maybe the second tool we built. T-Rex was the first, but Trendline Trader is a great foundation for your or trading the technicals, put it that way. And as the name suggests, using trend lines, Ichimoku Trader, just focusing on the cloud, but the same structure as Trendline Trader. And then you've got Primetime Pro, which is a technical tool, more trend based than obviously trend lines. All right. And I did try and incorporate Trendline Trader with Primetime Pro, but the tech guys could not build that. Now, fundamentally, right, we're talking about the economic data releases. We've got T-Rex, right, to trade live, take control of your trading. Now, this may seem, and I'll come into this as we go into T-Rex, it may seem like, trading live is, a little bit difficult because you can end up trading on emotions, and that's not good. But you've got the most control when you are trading live out of all these tools. Gorilla Trader, right? I built that to really accommodate, the 24, 5.5 sort of time frame for the global markets, right? I'm a pretty good 8 to 9 hour sort of sleeper every day, right? So there's a 9 hour period there each day, each week, where I'm missing things. And if there's key numbers coming out, well, you know what? I can take advantage of those opportunities. But there's specific setups for all of these that you just need to be aware of. In particular, Gorilla Trader, and let me just explain where Primetime Pro comes in and sort of dominates a little bit more around the technical trading. All right, so let's just get into the structure of this now. Let me just come into the market. And if we're looking at the charts, right, there's a whole range of things that you can do. So when you are coming in and considering what trade execution tool to use, you're sort of looking like considering market conditions is one thing, right? And you know what, and where the trend lines are, what the technical structure is. This will give you the edge of not only knowing which tool to use, but what orders you may need to use inside there, right? Now, let me just sort of focus on, let's just have a look at the Aussie here, right? Get my pen up. Okay, so you've got this like a bell-shaped curve here that is, you got this low here. It's been going up. It's drifting, 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 still drifting, right? And you know what? Drawing trend lines here is problematic. Now, what I would generally be doing, okay, if I'm looking at the say the economic calendar and I come up and I see I've got some key Aussie data coming out, and not that the NAB business conditions is massive, but say we had a CPI number. Well, there's a couple of things that you would do, right? You would consider where the setup is. Now, when you are using any of these trade tools, I would encourage you, excuse me, to use to draw your trend lines in as much as you can, right? They give you some like it's a safety blanket. You know, if I've got trend lines in play, I'm like, okay, that's good. And what it means to me is, right, is liquidity. I'm like, there's a liquidity hub there. I like that. That's where we can sort of get in or get out. I'm not worried about it stopping so much. I'm just worried about liquidity at the time of entry. And if there's liquidity, makes me feel good. Now, what is the situation here, right? So, say there is an Aussie CPI number coming out, right? And we're looking at T Rex. Well, the technical perspective, right? This is what you do first up. Always think of the technical perspective around, okay, is there any technical levels here that I can use? Now, if we do have live economic data, you cannot realistically use Trendline Trader, okay, to execute, especially well if it's within 20 points of the level, right? Now, let me just explain why. Now, if I just widen that out a bit, whoop, okay, let me just go one quick fix there. Let's go daily, hourly. Oh my God. Uh, Okay. So, all right, little couple of little tricks there to try and get it back into play. Now, one key thing that you would look for, right? So, oh, sorry, come back to Trendline Trader. So the mechanism for Trendline Trader, right? Just understand this. So what it does is, right, we choose, say we're looking to get into the trend. We're looking to sell below the trend line, 12 points below the trend line. And then, so if the Aussie rallies, it gets to this level. And then what it does, when it gets 12 points, it signals to where the trend line is. Then it signals back that it's 12 points and then it trades. There's like a one, two, or three little sequence in there to get Trendline Trader active. Okay, so we know it is set to say execute 12 points below the trend line if we set that up. But that order is not pending in the market, right? It's not like a limit order that's sitting there. What happens is it comes back when it gets to that level, it checks with the trend line, makes sure it's the right level, then goes back and then places the order in the market. Now, if you're using that as a stop loss, say for example, on the top side, right? We've got an economic number coming out. Whoops. And we're looking to get, buy a stop loss, right? This is where you wouldn't be using it, right? And I'm primarily saying if it's within 10, 15, maybe 20 points, you wouldn't be doing this. Now, this example here, it's what, 30 odd points away. You probably could use it because after the initial reaction of the data, right, you get this little skew if sort of liquidity, then it settles down, then the liquidity starts working quite nicely. But if you were within, say, 10 points and you're using Trendline Trader, it goes through, it hits the stop loss, it comes back, checks where the trend line is, double checks the level, and then tries to execute. But then it's going to be like potentially 10, 15, 20 points above. You're going to miss it every time. It will not execute at the level that you're looking for. So Trendline Trader, okay, within 20 points is a no-go zone. Right, now let's just come back to the level here. Right, we're looking for Aussie numbers. Now, if I'm looking at this situation here, and this is like an abyss, right? There's no real good technical levels here. We've got like the lows over here. So there's nothing here to use. So in this situation, there's two things that you can do. Now, when there's one clear side of bias, right? If I'm looking to trade live, I can use Gorilla Trader or T-Rex. Okay. Now, and why I'm sort of saying Gorilla Trader there at the same time. If I just get this account up, let me just come up here and get the Aussie. Okay, now templates. While I'm in here, you can actually save a whole range of different templates for different instruments. Okay, so if I say I just want to use my traditional blue, right? I can come in and just hit that up, and I've already got T-Rex saved as the template, right? So there's a couple of things that you can do to make this a little bit easier. So in your MT5 or whatever trading platform you're on, see how many different templates, chart templates I've got. I've got a whole range of different ones. Blue is my traditional color. I use the black for using Primetime Pro specifically. But now let's just have a look at the market where the Aussie is. Now, as I'm saying to you, there's no sort of levels here below. So we've got a live economic number coming out. So I'm either going to use T-Rex or Gorilla Trader. Now, the setup is, and there's no sort of support levels. Now, you might sort of be thinking, and you could be drawing trend lines here for that matter. Um, you could start drawing trend lines from any points, not necessarily lows, but you sort of come in and you could be drawing a trend line from here to here just to sort of get an idea of what's going on. Okay. And is that something people would be looking at? That's what you're trying to consider when you are drawing trend lines. You're like, who's looking at that? Right. And it sort of makes a little bit of sense because it's just gone up and it started drifting sideways from this point. You can sort of draw the trend line and sort of work out from the price action if the market was actually paying attention to that or not. Now, the fact is, there's no trend lines below this level. So there's two parts to this. What's the best setup here? Well, if you're trading live economic data, okay, it's got to be T-Rex or Gorilla Trader, the fundamental trade tools. Now, in this situation, though, it's about what trade tools you use. Okay, there's two things to consider. Because if you're using Gorilla Trader, right, we're only using limit orders or stop entry orders, right? Now, in this setup, right, there's a big risk to the downside because there's no sort of levels here. There's no liquidity. And you know what? On a short-term perspective and long-term, it's sort of going down again now, right? So in this situation, yeah, I'm sitting here and I'm waiting to use T-Rex. Now, let me just tell you one other thing about this is if I'm sitting here using T-Rex and I'm looking at the numbers and I'm not really considering buying, right? If the pressure's on the downside, I generally, unless it's a borderline, like say we got a sideways moving market and we've got a key data release that's either going to push it up or down, then I might consider buying if it's good data or selling if it's weak. More often than not, I will just focus on the side where the risk is and where it's going, the trend and the risk. Like the direction is down here and the risk is to the downside. So with that, if I'm using T-Rex, I will set it up, set your trade plan up, and then I will sit there with my finger on sell, right? Then I just look at the numbers. I don't have the mouse over here. I'm not looking around, looking for anything else. I sit here with my finger on sell. If I see the number, I just hit sell, right? And then it's executed. So that's one of the key things that you need to be really sort of focusing on. Now, what orders would I use? Now, there's a potential if we have a big number coming out here and there's decent variance, right? This thing is potentially going to gap a little bit and head south. And if there's no technical levels and there's decent variance, the first move down will be larger. Then you get the retracement, which may not be all the way back, and then it goes, right? So like seriously, this is where you need to consider using a pending order, right? So we're using T-Rex for live data in the setup where there's like, I'm using an example here. It's a little bit extreme where there's no trend lines, right? And that's going to happen. You know, liquidity is going to disappear at the time of the entry. So what I would be doing is having a two-phase trade, right? And what I'm talking about there is I would come up here, put sell limit. Now, if it's a large number, right, you can go 12 points. 12 or 15 points from the market level is like smart, right? What we're trying to avoid is a little bit of discombobulation. Sorry if I finished my words. Then, so to avoid the initial, volatility. So if the number comes out a little bit skew-if, but not massive, you get that discombobulation. You don't want to get kicked into the trade and not. So what I would be suggesting is this is where you place a sell stop, not a sell limit. 15 points from the market. Now, all I would do is And this is where you can really get control of your trading and potentially not miss it, is 10 seconds before the number, even 5 seconds, right? Because that last 10 seconds, liquidity can go a bit mad. So the last five, you hit sell. Okay, the order is in play. And then, well, actually, I don't hit sell. I hit place the order. Let me just recap that. So once again, using T-Rex, I hit close all, right? I'm glad I'm using the demo account for this one. Right, so sell stop, right? What I need to do is hit place. I've done that. You know how many times I've done that? Actually execute at the level when I think I'm placing an order. I can more than I'd like to sort of refer to. Okay, so let's just recap that, right? So coming up to the last 10 seconds, okay, we've got a sell stop level. And let me just get rid of that because it's going to be deceiving. Sell stop. And we're looking to place the order in the market. What we are looking to do straight after is put our mouse back on the sell button to execute again, right? So 10 seconds out, you're getting all pumped up. This is where you're going to just keep breathing too, right? You hit place. The sell stop entry order is in the market. It's 15 points below the market level. You just need to watch the number, right? And if the number does come out week, you sell again, right? So what you can do is diversify your entry, right? You know, on the first one, there's a little bit of risk, but I tell you what, when the numbers do come out crapola, you will be happy that you did sell, right? With a pending order, and then you can choose to get in. Now, when you choose to get in, there's two things, right? Because it depends on how far it goes straight away. And you know, like it will retrace. How far depends on the level of variation in the numbers, right? So there's two things that you can do at this point. And I know we're sort of talking about the best trade setups, but I want to go a little bit deeper than that because at the point of where you get into the first trade, right? If it's 30 points down and you're in the cash, there's two things that you can do. You can take profit on the first one and get ready to sell, right? When it bounces. Obviously, this is the hard part because we don't know how far that rubber band is stretched to come back. But you know what? If you pick up 30 points, right, and then it rallies 15, you're probably happy to get back in, right? You've just locked in a 15 point, well, you've locked in 30 points and you're now getting in at a 15 point better level, right? So that's like number one that you can do. Now, generally speaking, unless it's gone 30 plus, I get in on the first trade, right? And I'm happy to be short. If I look at the numbers and I confirm what I see that they're terrible, then I look for the retracement to add the second trade in, right? Manually. And that's something that you can do. So the setup for T-Rex, you know, it really does just come back to um, managing. Let me just close that out. The is just managing the volatility around the numbers. And this is the hard part. Like if we had volatility through the numbers, it would be a breeze. But this is where trading, out of all of trading, is difficult because we don't know what the liquidity is going to do at the time of the entry. And that's where you need to sort of come back and work out the strategy around the execution, right? So using T-Rex, if you're in front of the screens, use a sell stop in this situation, right? It'd be a buy stop if it was on the top side. Uh, Diversify your entry, okay? Place half the trade in the market, get ready to sell on the second. If the numbers come out strong, all you need to do is come down and close out the order, right? You put the order in there, you can just go close. Now, on that too, now as you guys get more experience, you might be thinking, you know what? I only want to put one order in. It's going to be a pending order. That is fine, right? So instead of sitting here with your finger on the sell button waiting for the numbers, you wait for the numbers, right? You place the order in the market and you can either hit over here, close all, or over here, close there. So when you look at the numbers, you're looking at them. If they come out strong, just hit close and they're done, right? The risk is off the table and then you can start to trade. All right, so that's T-Rex. Now, if you guys have got some questions, just bang them up there because I'm going to be rocking through this pretty quick. Now, that's T-Rex. So the same situation, right? We've got an economic number coming out. and it comes out at like 2 a.m., right? Hypothetically. Now, there's one key thing that you need to understand with Gorilla Trader, right? It is set up at a preset time. Um, if you just go and put Gorilla Trader in the market, right? If the time is in the past, it will execute the trade that you set up immediately, right? So what you need to do is just quite carefully, right? You come over, hit today, and this is working off my local time, right? Use local time true, which is my computer time. So that's how I know what I'm doing. So if I wanted to set this up, you know, I set it up for 11 o'clock. You would set this up. Let's just set it up for, say, a number that's coming out 11:30. Okay. So what I would do is 11:29 and potentially, 50 seconds might be enough. Okay. You could go 55. What you want to try and avoid, if you go 55, don't forget you're asleep, then you don't want to be in a situation where it's like the guerrilla traders talking to the MT5 and going, okay, we're going to put this order on. And then in between that, whatever happens, maybe a technical glitch or something, and the order gets executed after the release, which is not good. Now, Guerrilla Trader is there to trade primarily the numbers when they come out. Now, to use Guerrilla Trader effectively, once again, I have done this in the past where I've placed pending orders both sides of the market. If I've got a trending market drifting sideways and it's a key number that is really going to determine once and for all whether it goes up or down, well, then I would consider placing like an order both sides of the market, right? 9.5 times out of 10, I won't. And I'll only use Guerrilla Trader if I've got very clear direct, like I'm going with the trend and the number will push it to a certain level. Now, we can use Guerrilla Trader when we do have technical levels, right? Same with T-Rex for that matter. I should have mentioned that, right? So you draw your trend lines, you've got your levels, and then you're sort of getting ready to trade. Now, once again, I get Guerrilla Trader up. First thing I do is hit today, make sure it's okay. We get the data coming out 11:30, 11:29, 50. So using the same example I did for T-Rex. Okay, so you can actually add a couple of trades here. Now, so we're looking for a trade on the downside, right? Looking to take advantage of weaker numbers. The trend direction is down. All looks good, but I'm going to be asleep, right? And so what I would be doing is going sell stop, right? I can have two sell stop orders here. You can place two different trades at different levels, right? That's something that you can do. And I don't think, yeah, I can't place. I was trying to set this up before to place a sell limit order after the release of the numbers. But then, you know what? We don't know what the numbers are anyway. And if you're asleep, you've got no control. So 9 times out of 10, right, you will only use one side, right? So say for instance, we're looking for a sell stop. I will actually change trade number two to none, right? That means I don't want to have like make a mistake. I don't want to have two sell stop orders at different levels, different, whatever it might be. So usually I'll do the smart thing, change it to none. Trade number one is the key trade. Now, this is the same thing. I've got the pip offset, right? So when we put the order on, the order will be set to execute 12 points below the market. Now, if it's a CPI number or something like that, I'm definitely going 15, right? And it might only seem like an extra 3 points, or you might think 15 points from the market. Don't forget the first 10 won't touch the sides, right? So you need to have that set up. And then with the whole reasoning around Guerrilla Trader is, right? So we're placing this order 10 points before the data is released. And then we're canceling the order 15 seconds afterwards. So 5 seconds after the numbers. Now, you might want to change that to 10 seconds. It generally works for 15 for me, but you've probably seen this a lot of times when you're looking at the numbers as well. Sometimes there's a 2, 3, 5 second delay, right? This order is on and off before the numbers come out. So you could potentially change that to 20, right? And you want the order canceled. If it's not executed within that 10 seconds after the numbers, you want it canceled, right? This is a trade order set up to take advantage of a certain result and a certain reaction. If it doesn't get triggered on the first like 5 or 10 seconds, then it's not, you don't want to get triggered, right? It means the data isn't good enough because what we're looking for is good variance and for it to disappear. Okay. But you can see how you can lose control here. You're snoozing away and we place the order in the market. And if I just come up here, 10.29. Okay. So I've got it set for 10.29.50 and that's like less than a minute away. So now you can go OCO, one cancels the other if you're looking for a buy stop, sell stop. But once again, Guerrilla Trader is just there to take advantage of a release, give us a sell stop order, or you could use other orders, of course. I mean, you can see you can buy or sell. You can buy at market at the time of the release. That's a little bit crazy. And then just place it in the market. You've got the details up here. You can see what's going on. And it's just a matter of waiting for that order to be put in the market. And you've got nothing else to do, right? This is the whole point of it. Normal market conditions, right? Say with good trending markets, you can use Guerrilla Trader very comfortably or confidently, I should say, right? So that's the sort of key part. You can see, you know what? That took about 3 or 4 seconds longer to get on, right? Let's just have a look where it closes out. And I've got it set for 20 seconds, so it should be 10 seconds after the data. 10, 11, like 11, 12 seconds, right? So there's a couple of seconds overlap there. So if you are using it, make sure you factor that in. I'll be looking at more 11, like 10 seconds before and probably 10 seconds afterwards is enough. Okay, so that's the fundamental aspect, right? So we're looking to trade live. Now, just coming back quickly, if this is a major release, right? Let's just come back, say, Euro, right? And the setup is we've got a US numbers in particular, right? So I get set up here and we're looking, and we do have CPI numbers today, right? So this is actually a realistic opportunity. Now, what I would be doing, and to me, the risk is, or not the risk, where the big move is. Let me just come back to the workspace just for a second. If we look at the setups today, let's get my chart to do some work here. Right. So the trend is your friend, right? And the market has completely, to me, been caught off guard with the deal that's been done. I think everyone thought there'd be a bit of a blow up and it wouldn't happen straight away. Now, there's been a big shift in the dollar, right? A bit of repositioning in the market. So now what's happened is it stopped at some key levels here. And I'm looking at these ones here in particular that have got support or resistance trend lines in place, especially on the hourlies, right? Euro and sterling. Now, Aussie and Kiwi are just cannon fodder, right? They'll keep going down if the US dollar keeps rallying. They're just unhealthy. And whether they got COVID or whatever it is, but they got something and it's pretty nasty. So what you would be doing at this point, so the trend is your friend. If it breaks these levels, it's already got momentum. I don't think for a minute, just because it stopped here, that it won't go again. This is like the market recharging, recharging. No one, see how they're not bouncing? They're not bouncing off these levels. That is a worry. Well, not a worry. That's a sign for us that's like, hang on, this is good. The market is a little bit, not confident. Well, they're not overly concerned about where the level is. So if I come back to our level here, tell you what, hopefully my drawing tools haven't ruined us. Now, what we would be, what I'm getting to is now we're placing an opportunity here. We could do the same thing, right, using T-Rex. And what I'm saying, the same trade profile, right? Sell stop. Okay, so it is a CPI number. So say we want to get in 15 points, right? Now, what we can do is turn the trade cross manager on. And this is probably new for a lot of traders because you haven't either had the opportunity to use T-Rex or not. And let me just get the little flightless bird up there. What I'm talking about is the Kiwi. Okay, so I've got these pairs in there, Euro, Aussie, Kiwi. Now, you can do the same thing. Now, you don't have to go crazy with your trades, right? So, say, for instance, uh, we've got four instruments. So, you've got four lots on the entry, you've got four lots on a potential second trade, right? So exact same thing. And you can't obviously do this with Gorilla Trader, or you have to go and set it up on four different charts, right? The beauty of T-Rex is you can actually set this up, and let me just close that drawing tool. Doesn't want to close those things out. That's great. Okay, now let me just push this up a bit. So if I hit place, right, these instruments are all quoted the same way. Yeah, my thing is not working well. So you got four orders on, right? Now, all you need to be doing is looking at the CPI numbers. If they're weak, right? I mean, well, in this case, if they're strong US numbers, it's going to go to the downside. So you can either sit up here with your mouse on all, or close these things out. At the same time, once you get confident you're building some capital, you can sit here and hit sell, right? And it will sell as well, right? So you can add to the position sort of instantly. So this is where you've got real control over your trading. And this is what, if anything, I've been missing, like seriously missing like an old girlfriend. Like this thing is like, this is where you can make some really good cash taking advantage of these opportunities. Once again, if I just hit close all orders are cancelled, right? So this is the multi-trade facility. And before you start going around and start drawing or executing again, make sure you turn it off, right? And you may actually come over here and just move these instruments back across, because you know what? I like to be sure when I trade that I know exactly what I've got in place, because if you put those orders on, you don't turn it off, right? And then you leave them all on and you come back to trade, you'll get a bit of a shock when you go to hit buy or sell and you're hitting multiple instruments, especially if you increase the trade size. All of a sudden, you got 20, 30, 40 points in play, or 40 lots instead of like 4 or 5 or 10, right? Okay, everyone confident with the fundamental tools, right? The setup, it can be either technically based, or, but what we are really trading is the numbers. Drawing trend lines tells us a lot about where we could potentially get in, right? And that is a good thing as well, right? So draw your trend lines, regardless if it's a fundamental trade or not. Okay, so that's the okay. Now let's look at the trend line side of things. Now I don't think I'm going to be able to get rid of those lines for some reason. Are you guys still there? Everyone, have I lost you?
We're here.
Good on you, Gav. Okay.
Love a good trend line.
Oh, mate, me too. Right? That is a tagline for a t-shirt, because when you got trend lines, you're like, it's comfortable, right? It's like that safety blanket. It's like just good. All right. Now let's just have a look here at Trendline Trader. Right now, Trendline Trader, as I said, was the first technical tool we built, a long time ago. This is like an old friend as well. And, you've got a lot of different opportunities here, a bit more than, well, you've got, I was going to say Prime Time Pro, but see, you've got break, range, break, false break, break, retrace, OCA breakout, right? So you've got a range of tools here. Now, one of the key ones that, like, where do we use it? Let's just come back to the best setup, right? It's where we've got a trend line, definitely more than 20 points from the market. Anything more than 20 points, you can use Trendline Trader. Okay. Now, what I would be doing, I can't help myself. I'm just going to draw another trend line in here, because it's the start of a new trend line there. And this may be handy for our execution. So we've got a trend line here, right? And this is one that the best setups. Now, you can actually just come in here if I can. I don't think I can get that pen to work because it's discombobulated. Now, the main situation is we've got a whole different bunch of things to trade. Now, the key part, even Prime Time Pro, and I'll come into that last, but we're looking for direction, right? Either short term or long term. Ideally, if you get both, you know you're working with the market on both time frames, right? The trend is going down both time frames. It makes you feel confident like a trend line. Now, we've got a bunch of different options here. Now, generally speaking, I would be placing trendline trader, or historically, say for instance, we've got an upper trend line and a lower trend line. Let's just go with well, actually, I'll call it upper because it's above the market. Looking just for a range trade, right? And you can choose your pips and all these sorts of things. You hit OK, get a range trade. I've got a break trade on the downside, but there's no actual trend line on there that I know of. And oh, hang on. Yeah, yeah. So what I've got, actually, let me just come back to ah, it's taking me right off the chart there. Let's just get hang on. Remove T-Rex. So with those templates, actually, while I'm here, if you are, this is the traditional template I would use most of the time. Primetime Pro, I'm using the black one, right? Because it's got a different color palette. So if you are, you can use, um, you know, Trendline Trader and these other ones on the black. All you need to do is just go down to the bottom here and you change the colors, right? So for the black. Dark label color. Let's go. Well, we don't need to change that, but we used to have just a light and dark template. Don't think. Right. If I hit white, then you actually have the details up. So if I did put Trendline Trader in play, then you can actually see what you need to see, right? But there's no, well, I don't think I've got a trend line on that one, so that shouldn't really be sort of doing too much. Right. Okay, let me just remove that. Come over here. Now let's just get back to Trendline Trader, right? And so there's a couple of different things. Let me just blow this up. I've lost all my drawings there. Hopefully not my train of thought. Okay, so we've got a level here. Now there's a couple of different options. This is going to be really frustrating for me because I can't um, I can't draw the trend lines to show you where I need to do. So let me just try one thing. No, it's not doing it. Anyway, so look, like basically the setup is if you've got a trend direction, which is down, then we've got we've got the trend lines in play that we can lean on, right? So then it's just a matter of placing whether it's a range trade or whether you're looking for a break. If it's going down, right? And I know this is just the best setups, but let me just tell you the best orders to place here. If it's going down, it's a range trade back towards the trend line, okay? Or a false break trade, right? That's going to allow us to go through the trend line and come back and place an order there, right? So now what I'm going to do is just name this. Okay, so then we've got our trend line, blow up the level. This is a false break trade, right? So as I said, there's two parts to this. And what Prime Time Pro does, it actually saves you potentially placing two orders, right? Because you can have two different orders here using Trendline Trader. One is the false break in case it breaks above the trend line. But where we were, this is where, and you'll understand where Prime Time Pro came out of because you know what? When we aren't in front of the screens, we do want to sell back towards this trend line, right? That is 100% what we want to do. But what happens when it gets close to there? Say something else happens in the market which causes momentum to overshoot, right? Well, at that point in time, we would go from um, wanting to sell here to go, you know what? I want to wait till that's finished, until momentum is exhausted on the top side, and then we want the false break trade, right? So this is where Prime Time Pro does both. So technically trading, if you've got a really good trend line, you could use Trendline Trader, right? And I know there's additional cost in Primetime Pro. So if you don't have Primetime Pro, this is your main trend trading tool, right? But just understand the orders that you need to place. Now, there's one thing that you can do, even if you've got just Trendline Trader, is you can set up either your platform, whether it's Metastock or I don't know if you can do it on MC5, but to give you a signal, if it gets close there, that's when you want to check, right? That's okay during the day, but once again, if you're asleep, it doesn't really help you too much. So what we need to do is ideally, if the markets are trending, you're looking for it to go down, and that's it, right? So the trend trade is generally the one that you would be looking to get into play 9 times out of 10. Of course, if we've got like the volatility that we've been seeing, and we've been seeing massive overshoots, well, that's where Primetime Pro is going to come into play. So any sort of technical setup here is going to be a good opportunity for Trendline Trader, right? And so you can put these in play. Now, as I said, if you don't have Primetime Pro, then you're really looking at what have we done there? Then you're really looking at potentially placing two orders, right? But one will get triggered and not necessarily get stopped out, but the maybe a bit of a headache for you to manage, because just because it breaks the trend line doesn't mean it's going to take out that first order, right? So just be aware of that. I draw this trend line here. I just come back across. And if you wanted to place orders on two levels, then you'd have to put it on two different charts, right? Just realized my pen isn't working again. Okay, so that's Trendline Trader. It's just a great tool, right? Now let me just come into Prime Time Pro before I go to Itchy, because it does sort of make sense where Prime Time Pro really came into play. And what we're talking about is just optimizing the entries, right? Because if you draw trend lines, sometimes, as I was explaining, and you guys may have witnessed yourselves, when you see the overshoot of the trend line, right? It's disappointing when you come back the next day and you see it lower, and you're thinking, well, that wasn't exactly gorgeous. I don't like losing money, especially when you get it the right direction. You just got the wrong timing. And that's generally where, we know where things are going. It's all about timing. So the tool here is about getting the best timing, right? If I just And so as I'm sort of doing there, right, I'm just compulsively, right, drawing trend lines, because I like to see where they are, and I will do it. If you sit me in front of a screen and you're talking to me and there's no trend lines up, I will just start drawing them whilst you're talking to me, right? It's just a good thing, a good habit to have in place. Now, the situation here, right, and is dollar CAD going up or down? We'd have to have a look at the short term and long term to work out what's going on. On the short term, it is, here I go. I keep trying to use that pen. It is going up, right, at the moment. So when we are looking, but overall, if I go to the daily chart, come on, timer. Let's go to template, and let me just go long term. Okay, so I can see long term. Okay, it's just coming back to that level. It's still going down on the long term. And then on the short term, it is going up, right? So there's a bit of a conflict there. So, but where does Primetime Pro? This is not a bad example of hey, my pen's not going to work. Where dollar CAD is going down on the long term chart, right? And you're like, well, where's that trend line? Let me just draw this in, and it's a pretty vague trend line. You've got the top, you've got the level here. And then you might be thinking, well, I want to be getting short, ideally close towards that trend line, or when momentum completely is exhausted, right? And this is where Primetime Pro sort of uses the features of Trendline Trader, except we know where the direction is, right? I would still draw the trend lines even if I'm using Primetime Pro, because when they all line up at the same level, you're probably increasing your trade size, right? If the trend line was down here next to the bull bear pivot line and it was topping out short term, like that is a great trade that you need to be getting onto and putting Primetime Pro into place. So all you're doing with Primetime Pro is recognizing when you have direction, clear direction, short term and long term, then that's where we're using the tools, right? This is where the live trade signals come into play, right? Where we do have clear direction on both, okay? And then we're just waiting for the basic signal, right? And that's what, instead of sitting in front of the screens waiting for the optimum level, Primetime Pro will wait for that and just trigger when it goes through, right? And this is a trending tool. And not necessarily a trending tool because you can use it in sideways moving markets. And I've sort of started to look a little bit deeper around, these overshoots. And I tell you what, quite frequently there's some cash in them. If the market, if there's fresh news out and there's a momentum in the market, right? Like this section along here, it's just going up and up and up. You're not looking to try and pick the top there, right? If it's going up, you would know if you've been through the prime time trading course, you're not looking to sell, right? You're a buyer, but there's no buying opportunities because it's just so erratic. Then once it tops out and it's going down, then we're looking to sell, especially if it's below the bull bear pivot line and below that trend line. So you're just putting this in play and you're waiting for it to execute. Now, just on that, for those traders who aren't aware, let's just go into now, there's three different entry trigger levels, and everyone should have access to prime time trading, the course. So, you know what, you can be aggressive going with an early sell. Okay, if I hit OK, now if I just what all I need to do is come down and change the oscillator, change the early sell, and you'll see it will sell when it goes up. It's a different colored arrow, and that's where you are. So you've got three different levels here to potentially sell. Now, I generally use prime time myself, selling or buying, because it's the last entry. It really confirms that is the top or the bottom, and then it sort of generally goes through. So but you can be aggressive, right? And you can come back and look at these different levels, even peak, right? If you go to peak sell, you'll see once again, you got the green and blue arrows. So that's where it sort of tops out, where stochastics actually tops out. This is probably medium aggressive risk appetite. And then you got prime time as well. But you need to change the oscillator to see where it is going to execute because the oscillator works on the same functions as the execution tool, the EA, but they do work on a different system, right? They've got the same structure, but two different things. So so when it comes to Prime Time Pro, this is something extra that you need to consider, right? And I'm doing this a lot more. When you are using prime time, when you are trading technically, right, trading the crosses, and I'm starting to realize how much cash is in the crosses, right? Just very, like it's a lot more. It's like being at the library instead of like trading the market or trading the majors at the moment is like being at a football match. Lots of screaming, lots of yelling, and a lot of momentum shifts and all that sort of stuff. The trading in using Prime Time Pro, right? And the crosses, trading the crosses is like being in a private box, soundproof box where it's very calm. You can get a drink or a feed when you want to, and it's very, very relaxing. But the problem is, right, using prime time, I mean, using Trendline Trader, right, for trading the crosses have much bigger ranges, right? Can be up to 200, 300 points in a day, right? Quite frequently, really. And so the thing is, they have, because they're not the majors, that this is they are called the crosses, and they're not part of the majors because that's not where the major liquidity is. They are susceptible to overshoots, right? Even though we've got levels here, I like to see where the technical levels are because it tells me there's going to be resistance there, and those sorts of things. But what I want to do, but what you see when you're placing trendline trader in play, you can get some serious overshoots that blow you out of the position. Whereas once we know where they're going, if I draw this to here, right, let's have a look where this is. So we're 57. Where's my crosshairs? Here it is. 88. Okay. 88 and breaks through 57, like 30 points. That may be enough to keep us in, maybe not. But what you want to do is at that point, it's a bit of a double-edged sword because you look at the opportunity here when it gets to this level here, right? And this is going to be the thing. It hasn't got into a signal for a selling opportunity, right? Using Prime Time Pro. But then you look at this and you're like, well, Trendline Trader would have executed, but we may have been kicked out. If you're using a 50-point stop, you're still in. So there's always going to be these situations where one tool may have done a better job than the other. What we need to do is look at the setup, and I'm sort of saying to you, if you've got Primetime Pro is going to be more successful on the crosses than Trendline Trader because there's a lot more overshoots of the trend lines in the crosses, right? Just because of their liquidity structure. So that's just something to consider if you are looking to trade these things technically, right? And I tell you what, looking at the crosses a lot deeper in the last month or two, and this has mainly come up just because of all the issues with the US dollar, the tariffs, and everything else that's going around, and the up and down comments from Trump hasn't really sort of made trading the majors easy, right? We've seen big flush outs both sides, whereas the crosses have been quite orderly, if we get structure, trading these things technically is a good thing to do. If you don't have Primetime Pro, well then Trendline Trader is your choice. Now let's just get into the beast, right? So we've got two different structures here for the beast. Now you can just trade the cloud. Okay, so once again, now for those traders who aren't aware, this is like we spend so little time on the yen crosses, it's actually a little bit crazy, right? And I'm sort of talking about myself. We don't talk about it enough in the Discord. We don't talk about it enough every day, right? The yen crosses, because of the cloud, potentially is the easiest trading instrument, right? Especially during the Asian session. Now, we just know that if it breaks down through the cloud, it runs to the bottom side, downside, right? There's two support levels, there's two resistance levels. That's all you need to know. So now the safest trade here, right? Now, if it is trending up, right, dollar yen is trending up, well, then you'd be looking to go with the trend, right? Just on a general trend perspective. Now, you would be drawing your trend lines. Make sure you know where they are. And we want to know exactly where the cloud is because that's where all the Japanese traders are trading. And you've got to respect the Japanese here, right? They are the biggest trading country in the world. They just froth over FX, right? I mean, I've been going there since the mid 90s. And when you go out, I mean, not everyone can speak English, but the guys that do, all they talk about is what's happening in dollar yen, or as they would say, dollar ren. Like a bit of Asian humor there for those Asian fans out there. And they are aggressive traders and they hit it all. If you haven't heard the story about Mrs. Watanabe, you might want to look that up. And that's why it became so prevalent. But dollar yen. Now there's two things, right? This is a trending instrument. That's what dollar yen does. It either trends up or it trends down. Now, if the trend is up, then you're just looking to get it long above the cloud, right? I'm trying to use the bloody drawing pen there again. But so you would be going with the trend and let's see that. No. Okay, so in that situation, upper or lower. Now, the upper is the top of the cloud, lower the bottom of the cloud, and you're just looking to get into the range trade if you're looking to go with it. You can try and be clever. I never try and be over clever. Like you could go range trade the top, but if it breaks down, you get into the break trade. Yeah, sure, that you could do that. The and if I get Ichimoku offset on here, right? And you'll see very clearly where my two entry levels are. One at the top to get long, the other one to get short. Now, one thing, right? And this is we're talking about the best setups for various trade tools here, is I would be sort of looking when you see dollar yen trending up on all the various crosses, I would be more inclined just to be placing stop entries below the bottom of the cloud, right? This thing is when it goes unexpectedly, right? Everyone thinks, oh, trade dollar yen, it's so easy. I was the head trader at Citibank for 3 years. I must have aged 15 years, right? It is a nasty bastard. But when you're on it, it runs, and you need to be asleep to capture all the profits because I can tell you when it starts to run, you even get nervous when you're at like 100, 150 points in the cash because it can turn around very quickly. So you need your trade plan in play. But what I would be doing is if it's trending up and it's above the cloud on all instruments, and what I'm really talking about is I think if I did I end up doing that template? I don't think I didn't do all the crosses at this point. So the because if it is above the cloud on all your daily on all your hourly instruments, then you are potentially, and I'm serious about this, just coming in at the start of like maybe Monday, Tuesday, is just putting on break trades because if it breaks down through the cloud, right? So the top of the upper part of the cloud, I go none, break, and that's it, right? I don't need to do anything else. And this is a strategy that will pay dividends, right? I've been meaning to do this all the time. I get so caught up, and then you see dollar yen like 400 points lower on a clean snap through the cloud. You really kick yourself. So have a look at the cloud, the ones that have good, like I was going to say the majors, but they like for Japanese traders, the yen crosses are the majors, right? That's what you got to understand. So euro, yen, sterling yen, Aussie yen, Kiwi yen, CAD yen, Swiss yen. That's just CAD yen. They're all there, right? So this is a strategy that I would consider um, everyone doing, right? I actually might even make another video after this just to go, this is the easiest way to trade, right? Trade any of the yen crosses at any stage, right? Um, because that's basically it. I mean, the best thing about why and how I feel comfortable looking at the yen is because the I know the cloud's in the right spot. It's got a set formula, right? It's just a giant moving average. I know where everyone's going to be executing, and you just go and put the trades on. If we traded the majors like that, it'd be so easy just to put the trades on. You take out all subjectivity, and you're trading with the market. So as far as setups, Ichimoku trader is probably the easiest, and the yen cross is the easiest. What we need is just easy trading conditions. Um, John's got a question there. If the yen is below the cloud, do you do a break trade above the cloud? Yes, absolutely. The still can't change those drawing things. Let me just remove that. Another thing, if you're not using some of the tools, just get used to taking them off your charts as well, because you don't, last thing you want to do is get come unstuck there, right? So now let me just have a look at some of these crosses here. Oh, they're all going to be above the cloud. Yeah, the answer is yes, John. You would. I think Swiss yen. might be the one. No, it's still there as well. Okay, so actually on a daily perspective, let's go. No, I was just trying to find one that is, oh, okay, I mean, the pen isn't working, but yeah, if the price is below the cloud, you use the um, lower level is the bottom of the cloud, and the upper level is the top, well, the upper level, and then we just place a break trade above the upper. And check that out. That's like a disco. And oh, let me go CAD yen. So they're all above the cloud, right? The So if you don't have if you don't find any or have any affiliation with the trend, right? Or you do have an affiliation with the trend, you think this thing's going up, well then definitely look to get long. What I'm saying is, as far as a dumb and dumber trade, there's nothing to lose by you placing an order below the market here, below the cloud, and draw your trend lines because if you see an itchy barn set up, which is right here, at these levels, if it breaks down through that, that is a 99% winner. We should be focusing on that a hell of a lot more than what we do, right? So, out of this presentation, right, you've got three trend trading tools: Trendline Trader, Ichimoku Trader, and Primetime Pro. And then you've got two fundamental execution tools, T-Rex and Gorilla Trader. But you know what? As an extra thing, we should just do it as a mandatory thing each day. I think I'll make a note of it. Is just come in and get organized on the yen to take advantage of potential breaks to the downside. And I think dollar yen is going back down 20 cents. So that's maybe that's swaying my judgment, but I do miss it a lot. Right. Any questions there, guys? So you can see here, right? Like trading, if I set up T-Rex and I'm looking for opportunities here, you could be looking at stochastics, looking if it's going up. And this is one of the things too. If I just come off this chart for a second, let me just come up here. Let's go Primetime Pro short term. Let me just want to take Primetime Pro off. Okay, so this is the thing, right? I do use the prime time oscillator a lot now, just leave it up. If it's bugging you, then you can sort of take it off. But now one of the key things, if I'm just looking to get long and you're trading, you know, for all money, euro is in a situation here. You want to be trading with the market, right? And there's two aspects to that: the overall trend, short term and long term, and then with momentum. If it's an economic data release, then you're just looking to get straight in and take control. You can just get into the market straight away wherever the market is using this tool. T-Rex gives you the most control. The Ichimoku Cloud Trader gives you the easiest trade, right? And what I was trying to explain there before I lost my train of thought was, here we're looking at levels, we're looking at liquidity, we're looking at a whole range of different things, right? So just be aware that which tool is the right one for the job, right? Gorilla Trader, actually, this is a good point. Gorilla Trader is generally when you're not in front of the screens, but say you are trading two different instruments and you want to just focus on one. Now, generally speaking, I would use the Trade Cross Manager, right, to get that trade into play. But we have had traders say trade euro, right, have two different orders in play. If I just come down here, we take off T-Rex. So I've got some of these templates saved with the trade tools on there. If that bugs you, you just take them off and save it without it. But this is where you could actually potentially have two different orders in play on a different instrument. Now I've got euro set up here on both. You set one up just to execute, right? Now, and you can have this on the same tool. Now, if I just come in, let me just explain to you what I'm talking about, because it won't be obvious just at the moment. So I've got a tool here. So we want to sell stop 12 points below the market. I always just go none. Hit OK. Now, so I've set up an order here to sell below the market, right? Weaker numbers. So say today's US CPI numbers. Now I come over here and I'm using T-Rex, right? But what I'm looking at T-Rex is, say I've got a pending order, sell stop, okay, 15 points below the market, or you're just looking to trade live, right? So if I place the order in the market, let me just come up here and go, navigator. Toolbox. Okay, so you got this order in the market. The good thing about having this is the setup, right? So you got euro, you're looking at two different things. This one here, you don't have to worry about coming over and canceling it if the data isn't, like, if we don't get strong US numbers, this trade is not going to get done. So you don't have to like focus on selling or watching the market. That you just know that that order is going to get triggered or not by Gorilla Trader, right? It just takes an extra level off your hands. So if the numbers do come out a little bit crazy and you're buying and selling, right, or whatever it might be, you don't have to worry about canceling that because it'll get done by itself. Okay. All right. Now that's a little bit annoying. I haven't been able to show you visually just with the pen to where everything is, but you get the idea. This will become a lot easier once we get that program set up with MT5 for everyone. You'll be able to sort of really get into these trade tools. They are great to use. Understanding if you do have trend lines, we've got a much better trading opportunity. And that will lead us into, do we use a pending stop entry order or do we trade live? If you're using a pending stop, it may be a little bit of a difficult situation for you to emotionally manage. So just decrease your trade size, but you want to get into it because as soon as the numbers come out, if it's 30 points lower, you'll pull your hair out and then start trading to try and make up for that cash you lost, right? So just decrease your trade size. If there's no trend lines, if there are trend lines, you can still use T-Rex. Trendline Trader, right? If it's really close, then I wouldn't be using it. Gorilla Trader, perfect for when you're not in front of the screens, or if you want to add an extra strategy to a potential live release and have it managed by Gorilla Trader instead of yourself, right? And then obviously Trendline Trader, Primetime Pro, and uh, and then you've got Ichimoku Trader, right? Okay. Sorry, I was bouncing around there. I'm a little bit out of kilt here with just the pen. I think you guys must be able to see that. I've got a couple of pen sort of drawings there, but it's just frozen the whole system. I would have had to shut down this presentation to keep it going. All right. Any questions there, guys? I know I was sort of trying to get this done sooner than later. It's been an hour, right? That's pretty hectic. Um, any questions whilst we're on this? It's a bugger about the pen, but I can actually, I might be able to sort of scratch another one up and put it together. I will do a video here on the easiest trading strategy in the world, which is a break trade off the cloud. That's something that everyone should know about. All right, guys. Yep, Nick says a lot to go through, but being good. All right. So
Brad,
there's two factors. Yeah.
sorry, Brad, it's John. Mate,
Yep.
with it's probably going off topic a little bit, but with trend lines, do you ever go back and delete really old trend lines
Yeah, I
if
do.
it's starting to get really,
Yeah, the ones that aren't relevant to where the market is, I generally do.
yeah,
Um,
okay,
on your daily charts, you probably have one that might be there, but you'll see, and actually just coming back to that, if you see some trend lines like this one here, I would leave. John, this is a good example of where it comes in. You can see where the price is. It's sort of still relevant, but
yeah,
I've already probably deleted a couple this morning, just like they're sort of in the middle of nowhere. They're not relevant to where the price is. Like this one here is just enough. It's an old trend line. It's orange. See how it's sort of been stopping here. Plus, we got, generally speaking, when that down sloping red resistance line goes below the orange, it's almost time to cancel or delete the old one that was there.
Okay.
That's a general rule of thumb.
Yeah. I've just been updating since your last video on the trend lines. I've gone through and updated all mine again, just put in the same sort of color scheme, and it makes more sense.
Well, it does, right? It makes you when you look at the charts, you because it's if it's affiliated with yourself, you're like, right, I know exactly what's going on here. I've got a, a, a resistance trend line, it's red. I've got a green one that looks like a long-term level, and I've got this old level that's hanging in there. It tells you a lot about what's going on instantly. And
Yep.
like if you're looking for trouble, look at this. It's a bit of a bloodbath. These two sort of long-term um, lines. And I was actually mentioning this last week. Usually, when the trends contract, you see a break to the downside, you see a break to the top side, and then all we're doing is coming back and redrawing the trend lines at the end of the week. But anyway, so that's yeah, that's been a good one, right? Once again, once we get MT5 up, I'll probably come back and revisit this because everyone's going to need to get up the curve once again on using the tools. And I know a lot of guys are trading their own cash with the tools. So it's if you've got any other questions about that, whether it's someone who, whether it's one of you guys here in the presentation or someone that's watching it, just come back and ask us the question. I can sort of recap a little bit once I get that, once the pen is functional because it makes it a bit easier. All right, guys. Well, that's a good little run through. The just just as a note, side note, just put on there. Just tell yourself to keep an eye on dollar yen. It is a definitely worth having a bit of a bo peep at. Right, you just keep an eye on it because I tell you what, it's a passive trade. You don't need to be looking at too much, and quite often you can sneak into a couple of trades. And if you go back through and have a look where it breaks down, you'll be able to see what I'm talking about. Like some of these, like even if it's what's that, 22. Okay, so that's down like 30 points. If you've got a 20-point trailing stop, you get into these trades and it runs top side or downside. It is a what you're looking for is uniform action across all the crosses, and that's where you can actually really pick it off. All right, guys, have a good one. All the best. I'll get this video up as not as great as it might be, but hopefully it's helpful to those trying to work out what the best setups here. All right, guys, have a good one. Thanks for joining me. Cheerio.
Thanks, Brad.
Thanks, Brad.
Thanks, Brad.
See you guys.